Welcome, First Lady for Harmonic in the house. It's been a while since I posted a video, but as usual, the key to being a professional trader is really just to spending a lot of time on the charts, and that's something that I love doing, spending time on the charts. So I decided to share something with you, something that's up and coming right now in reference to this particular pair. So we're looking at GBP, AUD, the British pound, Australian dollar. So when I saw this, we see that we clearly are in an uptrend, because why? We have broke the previous high before it started making an uptrend. This was the previous high right here. And then we have a low. And we know that we're going in a downtrend because price is making lower lows, retraces. Uh-oh. Let's get this right here. Retraces, makes a lower high, then a lower low. This was actually a retest, as you can see, and made a lower high, and then it made a lower low. Then it made a lower high, and then it made a lower low. So this is your basic market structure. This is raw market movement in which price moves in waves. And so, again, always being able to see the market in this fashion, you'll be able to identify what trend you're in, because you're making either higher highs and higher lows, or lower highs and lower lows. And what happens here, it no longer made a lower high and a lower low. Actually, what it did was, let me get rid of this real quick. Actually, what it did was, it made its low, and then it made a lower high, and then it made a higher low. So now this is just an indication that price could be changing its trend. And so this would be an aggressive trade. I know some particular trading methods where you would trade at this level right here, and you would definitely catch most of the pips. I have to admit that I am one of these aggressive traders, and so I would be interested in taking this trade particularly right here. But the conservative trader, the one who wants to make a confirmed trade, will wait till this high has been broken, and then there has been a retest, which is the retest right here. And now we are in what we consider a confirmed trend change. We are now in a buying trend. So what I like to say is that I am a move trader, not a move maker. I could be considered a move maker sometimes, but I'm a move trader. So what that means is that counter trend trading, yes, I do that. But what I'm looking at is what I call the move. So what do I mean by the move? Which means that if I'm going to be in an uptrend, the move where I'm going to catch multiple pips will be in the direction of the trend. So I'm looking for a massive amount of pips if I'm going in this direction here. That's what I consider a move. It doesn't make a difference if it's 50 pips, 60 pips, and then it reverses. I'm still in the direction of the trend. And even though I'm making 50, 60 pips, my goal, or what I'm seeing, or what I'm analyzing, is probably much more than that. But anyway, so we're looking at that, understanding what trend we're in, what's going on, and seeing, again, in reference to harmonics, seeing what I call the double bottom, because double bottom, the double tops are what harmonics are based off of, we can determine what we're looking at. So what I did was I took my Fibonacci, and you always, once you're able to measure out the impulses, you use your Fibonacci tool, and you measure from X to A, which will give you your B, which looks like 786. But here's something interesting. Yes, 786, a little close to 886. I'm going to give it more of an 886. Let me just see, because you can use different impulses. That's actually quite relative. So let me see if I was to move this up here. Yeah, I think I want to use this one. But if I use this one here, yeah, we can use this one here. If I use and just get rid of this here, just show you what I'm looking at, when I look at these, what I'm actually seeing. So let me get rid of this. So from my X to my A, this is the previous impulse leg. We're measuring an 886. There we go. So 886, only one harmonic pattern would be the 161.8. And as you can see, it clearly hit the 161.8, took out the stops and fell. So this harmonic pattern is complete. And from A to D, you have a 38.2 and a 61.8. And you can see both, it hit perfectly. 61.8, 38.2. Right? And so this harmonic pattern looks like this. X, A, B, C, and right there, let's say like that, 161.8. Both take profits have hit, and then basically this was the retracement. And harmonic usually sometimes goes into it either is a continuation trend or a break, new trend, going into a new trend. So this was the retracement of this whole move up here that broke the actual selling trend, and then it retraced back, and it did so with a harmonic. And so now, where are we right now? This is great to see, to look at. It's finished. To take profits is finished. But now where are we at? Understanding that harmonics is, the market moves harmoniously. So now I'm looking at this particular move, high to low. So now I'm looking at X, A, B, C, or 50% could be a bat pattern or a crab pattern. We know it's not a bat pattern because the 886, it has been broken. It's been broken with an impulsive move. So we know that that's counted out. So what I'm looking for is the 1618. I'm actually looking for another crab pattern. So we had a deep crab here, and I'm looking for a crab pattern here, which ends at a 1618. So some X, A, B, C, D, 1618. And we always, of course, always want to use our extension pattern from X to A, back into A. And what we're looking for is a 224 minimum to a 3618. So I like to start with a 224 and see where we are on this. That's weird to show up. Let's see it. $224. Let's see what 200 is. Oh, there it is. Okay, so 224. So now they're not showing up. So let's look for 324. My 324, my 1618 line up perfectly. This is what we call a Fibonacci cluster. So when price reaches to this area, it's a very, very strong area of resistance. And so as an aggressive trader, you can either just place your pending at the 1618, 324 area, or you can wait for price action. And price action would mean some type of reversal candle showing that the trend, not that's the trend, but we are now looking to sell. Another nugget you can look for is that once price hits this area, the candle will be bullish. You want to look for some type of rejection. You're going to look for a wick. You want the next candle to be a bearish candle, showing that it is responding to this area of resistance. And then you can take the trade from then on. So there are various ways to take this particular trade. It's something to watch. We are not too far from there at the current moment. We are at, let's say, 198 pips, which is for GBP. That's nothing. It moves in that in a day, or sometime even in one candle. So this is what I see right now. If you want to take this trade, the price would be at 186,991. 324 has a little bit slight difference, but in this area right here, take a look at that, and then you would like your let me get rid of, no, let me just see from A to D. And let's just say price rejects at the 618. It may go a little higher, but let's just use the 618 as the actual ending point. We're looking for 382, 618. take profit area. Okay, so I hope this helps. Again, looking at the market, how it moves in a harmonious manner. As you can see, it does nothing but create harmonic patterns. This is First Lady Harmonic coming at you. If you have any questions, feel free to drop me a line. Talk to you later.